view currency correlations, there has been a high demand from students as to just a brief explanation on how currency pairs are correlated to each other, and how you can create a bundle of currency pairs. So let's say you have 5 or 6 currency pairs in your bundle that you just study, so that you can understand which currency pairs will move together and which ones will move in opposite directions of each other. So the web page that I use to check out the currency correlations is the one here on top. As you can see, myfxbook.com/forex market/correlation, and that's the one that you want to be searching for. So what I've done here is I've now inserted find currencies with correlation higher than 80%. So now what it will do is it will highlight in blue currency pairs that's correlated with a high percentage than 80% over there. So what I'll do is I'll use Euro Australian dollar as my example over here, and I'll explain this quickly for you. Now if I look at and I'll just put -18 over there. So now it will highlight those ones for me in pink where there's a negative correlation. Now the reason why I'm using 80% is because it will have a higher correlation to the currency pair, or repelling from the currency pair. So if it is that I want to trade Euro Australian dollar, and I've selected Euro Australian dollar as one of my currency pairs that I want to trade, I can now compute that Australian dollar Swiss franc has a -96% correlation to it, which means that if Euro AUD is in an uptrend, then AUD Swiss franc will then be in a downtrend. The same applies for AUD USD, so Australian dollar US dollar. So if Euro Australian dollar is in an uptrend, then Australian dollar US dollar will 10-to-1 follow through in a downtrend because of the minus or the negative correlation of 89% and 85% over there. Now following that, I've got CAD Swiss franc over here, and CAD Swiss franc will have a negative correlation to the Euro Australian dollar. So that means if Euro AUD is in the uptrend, then CAD Swiss franc is most likely going to run in a downtrend over there. And now we'll look at just a few positive currency correlations. So we can see, for example, the Euro CAD and the Euro Swiss franc. So if Euro Australian dollar is in an uptrend, then you might as well go long on Euro CAD, and you can consider going long on the Euro Swiss franc over here as well, because it has a 90% positive correlation to the Euro Australian dollar, followed by the Euro Norwegian kroner, also has a positive correlation over 93% over there, and then Euro New Zealand dollar of a 94% over there. So in a short summary, what you want to do is to look for correlations with a currency correlation of more than 80%, and then choose the time frame that you trade. So in my case, I trade the daily time frame, so I want to see the correlation between these pairs on a daily basis over there. And as you can see, it highlights for you which currency pairs you want to trade, whether it's the franc 40 over there, whether it's Euro USD you want to trade over there, or whether it's GBP, New Zealand dollar, etc., or even if it is that you want to trade GER30 over there. Alright, so here you can see GER30 is directly correlated to Euro AUD in a positive correlation, and it has a strong positive correlation with GBP JPY, US dollar CAD over there, and that's a significant correlation over there in itself that you can consider in the market over there. Alright, it even has a correlation with the NASDAQ 100, so that's also one to consider over there. So that's a short summary as to how you can use correlations to your advantage. And just remember, if it is a negative correlation to your pair, then they will move in opposite directions of each other. And if it is a positive correlation with the pair, then they will simultaneously move in the same direction. Now, when I say simultaneously, or when I say they will move in the correct direction or in the opposite direction, it doesn't mean they will happen immediately. As soon as the one shoots up, the other one will follow. It might have a few hours delay, it might have a few minutes delay. So you need to basically study what is the actual delay between those currency pairs, so that you can see okay, if that one went in an uptrend over there, I know the following one will maybe in the next hour or two move in that same direction. So then I can capitalize on the one that's more slower reacting to the correlation over there. So